Okay, we're going to continue on to the next short problem, S2-5. Again, this is just an example. We're going to journalize transactions. So you can follow along in your book if you want to, or even better, it would probably be a good idea at this point to try to journalize these transactions on your own and then watch the video to see if you got the correct answers. So I'm going to move over to my worksheet. Again, this is my general journal. And our first transaction, our problem says that Texas sales consultants completed the following transactions. And our first one happens on January 22nd. We performed services for customers on account for $8,000. So whenever we perform services on account, or if we sell goods on account, that means we're going to have receivables. So when our receivables increase, we need to debit them. In the amount of the transaction, which is $8,000. And since we perform services, we can record service revenue for the same amount. And remember, revenue accounts increase when you credit them. So here we go. And it's always good form to include a brief explanation. We can say performed services for customers on account. The next thing that happened on January 30th, we received cash on account from customers for $7,000. So now our customers are coming in and they're paying some money on their receivables. So anytime we get cash, we need to debit cash for $7,000. We're going to credit accounts receivables because this is reducing the amount that they owe us for $7,000. And we can say that we received cash from customers on account. Really, the key fact to know when you're journalizing is to be familiar with your accounts and what type of account each one is, because you're going to need to know, well, should I debit cash or should I credit cash? Should I debit accounts receivable or should I credit accounts receivable? You have to know what type of account it is. Is it an asset? Is it a liability? Is it an equity account? So remember, cash and accounts receivables are both asset accounts. So the reason that we debited cash in this problem is because we want to increase the amount of cash on hand. So assets are increased with a debit. And we wanted to decrease the amount that customers owed us in their receivables, so that's why we credited accounts receivable. Because when you have an asset account and you credit that asset account, it's going to decrease. The balance is going to decrease. Alright, so let's move on to the next one. On January 31st, it looks like we received a utility bill for $180, which will be paid later on in February. So we're going to go ahead and record the expense for utilities. In accrual accounting, you would record expenses whenever they're incurred. And let's see, our utility bill was $180. We're not going to pay it right away, we're going to owe it. So we need to record a liability and call it utilities payable for $180. And say we received utility bill due in February. Okay, the next transaction is that we paid a monthly salary to a salesman for $2,000. So this happened on January 31st. We're going to incur an expense, so we need to debit that expense. When you increase your expenses, you have to debit them. So $2,000, and we paid cash. So we credit cash for $2,000. And we can say that we paid monthly salary to salesmen. Our next transaction on January 31st is that we received $1,500 for 3 months of consulting services to be performed starting in February. So we should know that if we receive cash, no matter what else happens, we have to debit that cash. So $1,500 debit. We won't talk about this account until, I believe, Chapter 3, but we're going to credit an account called unearned revenue. Okay, take a look again at the transaction. It says that we received $1,500 for 3 months of consulting services, but we're not going to perform those services until February, at least starting February. So if you receive money for services, but you don't perform the services until later, that means you haven't earned the revenue. And in accrual accounting, you can't record revenue until you've earned revenue. So instead of putting the $1,500 into our service revenue account, we're going to put it into a liability account called unearned revenue. And it is a liability account because we owe someone 3 months worth of services. And we can put our explanation here. Received cash for 3 months of consulting services. Okay, and looks like we have one more transaction in this problem. On January 31st, I'm going to scroll up a little bit here. On January 31st, cash dividends of $1,000 were paid to stockholders. So we are going to debit dividends. And dividends is not an expensive account. We'll talk about this later in the semester, but dividends is just simply a payment that you're going to make to your stockholders, but it's not an expense account. But we're going to debit dividends for $1,000. And since we gave up cash, we have to credit cash for $1,000. And we're going to say that we paid dividends to stockholders. Okay, so hopefully that kind of gives you an idea about how to do some basic journal entries. If you have any problems with them, if you have any questions, feel free to either email me or post a message on the discussion board.